This is my October trading recap for my small cap trading and my algorithmic futures trading. I'm Manir, also known as GoSwap Trades on Twitter, and I also run Unbiased Trading, an agency where we can backtest and automate your strategies. Now, as usual with these recap videos, they will be a bit more roundy. They purely really are a service just for me, just to keep a record of my sort of thoughts on those particular months, my reviews of those, and also to obviously share some transparency as well. But primarily, a lot of it is for me. I hope you find some value in it. You guys are always super supportive in the comments saying that you do. I'm glad you can at least get something from it. But yeah, let's get into it. So for small cap trading, this month was insane. I will say a trend you'll notice is I've been very busy with just other parts of work as well. And I've been really focusing on my futures trading. So my small cap trading definitely has had a cutback in it. Now, I don't expect that to keep for a while. It's just for the current stage at the moment, which I guess has been about 2 months or so. I still did take around 8 trades on small caps. All of them were very systematic. They just all met my criteria, but I have made my criteria a bit higher than normally. So if you go back maybe 5 or 6 months ago, I was taking a lot more small cap trades. And that's simply because I just had more time. So I had lower criteria for a lot of my systematic trading in small caps, and I was just taking more trades to get more sample size, right? Whereas now I'm taking less. They're still historically profitable with all my back tests and my robustness tests, but I am aware that it's a pros and cons, right? Everything has a compromise, as Jin Simon says. So anyway, for this month was pretty insane. I think in the beginning of the month there was a good amount of stocks that really pushed up right at the around the open, or at least before 10:30 anyway. We even had a couple halts. I even took a halt slippage loss on BKYI. Now, I will say a majority of this month really just came from one ticker, which was SGD. It was an incredible fade, and I made, as it shows, around 7,000, or actually close to $8,000 on that single ticker by itself. It's definitely my largest win to date. I pushed size on it as I've been increasing my size over the months, and it just paid off. It was an incredible month. And yeah, that's primarily where you'll see all the returns came from. Like, we had a bit of a spike at the end of the month on, I think it was, can't remember the ticker name, but it was on one ticker that did okay. I think I made maybe 2,000 on it. So the total returns for the whole month is 10,544, which is incredible. I never thought. Well, no, like, I'll say that I've definitely been aiming for this, and I've been working hard for this. But it's crazy to see it come into fruition over these couple of months. Well, now I've been trading for about 5 years and a half, so it's taken a while. But a lot of the recent progress has been over the last 2 to 3 years. Now, that's pretty much all I really have for small caps. It was quite simplistic. I just follow my own systematic strategy in small caps, took 8 trades. I'll definitely say the win rate has dropped, but my R, so the amount of I'm making on trade per risk, has definitely increased by being more selective. Now, that isn't a pro necessarily always, because that means if I do miss a trade, for example, then I could take a decent loss month just because I missed that one trade that was maybe going to get me free R, for example. I do personally, if I was actively trading every single day small caps, then I would prefer doing what I previously have done, which is higher win rate to lower R strategies. Just taking more small cap trades, for example, as when the times is hot, you can get a lot of gappers, for example. But yeah, at the moment, because I'm being selective, it was 4 total winners, 4 total losers, so 50% win rate. Not terrible, but I'm used to really the 70% win rate mark, give or take. Now, for my futures algorithmic trading, this month was absolutely insane. There was a crazy amount of trades, an insane amount of volatility, and an incredible return as well. So this month I ran 10 algorithmic trading strategies, but only 8 of them actually took trades. Those other 2 were more sort of swing strategies, and they didn't meet any criteria for this month. So you can see here is the trades equity curve, and you can also see the drawdown. So we had about a 10.85% drawdown for a 37.55% return. Now, this month is by far an outlier month. To be honest, I really can't believe it did that much. Now, obviously, I'm capital constrained, meaning that if I put $1 billion on this, there's no way I'd get 37.55% in the month. Slippage would go through the roof. I'd have impact market theory, all those sort of things. But at least for the capital I'm trading, this is an incredible return. I think anyone would say it's an incredible return. I have seen obviously traders. Luckily, now I've got more of a following on Twitter. I do know some amazing crypto traders, and they would maybe they would laugh at this return. It is a lot smaller compared to some of those volatile markets, but for futures, this is by far insane. At least from my personal experience over the couple of years. Now, As you can see, the performance really varies this month from strategies. I've blurred out the strategy names just because a lot of the strategy names are dictative of what the actual strategy does, and also I'm not trying to leak all my main strategies. So for net profit, on one of them, I was down around 8%, right? And a lot of the other ones, they did okay, but I would say they were around just above break even. So you can see this was just above break even, 2.3, 3.65. And then we really had a collection of maybe three that were very heavy hitters and made up a lot of those returns. And that's really the bonuses of diversification. If I was only running, for example, this particular strategy, which by far is a robust strategy, a good strategy, but it went into drawdown this month, and 8% drawdown is quite steep as well. At its worst, it was around 11.65% drawdown. I also took a lot of trades, so 102. So I might try and filter those down. But as you'll always hear on these recaps, is I never want to make quick, indecisive decisions just because of 1 month's performance. So I try and wait at least 3 months. And that's why these recaps, normally I'm saying a lot of the same things, because it'll really take me 3 months to get this sort of data and then actually make a decision of what I want to do with these particular strategies, for example, right? This profit factor, I'm pretty sure, is, well, it's mainly just because it only took one. I think it was like two trades, right? It only took two trades. And this profit factor doesn't really make any sense. But the rest of those were pretty impressive. Is how much of my returns this month were long based. You'll see, so this is the long equity curve. This is only taking long trades. And you can see it was around the same performance. I think it was a bit higher. And drawdown was around the same as well. And then if we look at shorts, it just completely wound down this month. I lost, I think, 3.5% trading shorts, give or take. So shorts were definitely not, I didn't well capitalize on them at all this month. And the irony is that this month wasn't actually terrible for shorts. There was definitely a trend up this month, but we did get some amazing moves, especially later in the month. Like these two moves on the downside, I feel like I should have capitalized on, or at least one of my strategies should have, but no, none of them hit. So that's just the way it is, I guess, with some strategies. And I feel like maybe I can always work on my short side, as I think a lot of algorithmic traders, especially if you're trading NQ, ES, those sort of mostly bull run kind of markets, if you can capitalize on the short side at all, I think that's a big pro. And obviously last month I think I did well, or did okay on the short side, but this particular month, yeah, absolutely underperformed. But as you'll see, didn't really matter. A lot of it just came from longs. I caught a lot of the good trends this month, and yeah, it just really paid off. Now, for keynotes, as you can say, obviously a strong absolute performance with 37% returns. I'll give that disclaimer again, completely outlier month. This is not going to retain with if you put $1 billion capital, for example. This is very much capital constrained. If I put way more capital than what I'm trading currently, it's going to get more slippage, for example, and I'm not going to be able to hit as big of these returns, for example. It's going to diminish down. Now, I will say this month took a lot of trades. It was 608 trades. Do I feel comfortable with that? Probably not. Um, there was good action and there was great returns. I don't ever like having that much commissions. Obviously, I was still net positive from more commissions and slippage, for example, but yeah, it was crazy amount of trades. I was getting notifications on my phone because I have notifications for all like orders and stop losses being hit and things like that, just to keep up to date with my algorithmic trading when I'm coding or things like that, right? And yeah, it was a lot of trades going through my phone notifications. Now, my maximum drawdown, personally, I'm actually quite happy with. 10.85%, pretty well managed, I think, for the return side of things. My futures algorithmic strategies are more volatile. I definitely could tune them down to get this drawdown lower, but at least right now, for my risk appetite, I'm perfectly fine with that. If it, for me personally, if it was going to the 20%, 20% above, I'm getting quite worried. But anything really below 15, 10 is very solid. And I would even say if it's below like 5, I'm probably not putting enough risk on. That could obviously be debated, but that depends. So I do have a high variance, I would say, in individual strategy performance. I think it's decently good because it means you're well diversified. You obviously don't want strategies to all be well correlated, which means obviously if they all do well in a month, then you're pretty correlated for the most part. Obviously, you can do your own correlation analysis, but seeing this variance is good for the most part. Now, my drawdown clustering, this was one part I was kind of surprised with. I do feel like a lot of my strategies are quite uncorrelated, or at least as much as I can get them currently. And they all pretty overlaid on drawdowns. So a lot of them went into drawdowns at the same time. That was a bit of a worrying sign. Now, not all of them. I'm not saying all 8 went into drawdown at the exact same time, but I would prefer to get it a bit more mixed, whether that be changing up to some different instruments on futures markets, or diversifying them even more. Now, obviously, key elements, just for some takeaways, just to provide a bit of value as I can. Key thing, and I'll keep on restating this, a lot of this was just due to portfolio diversification. I was running 10 active strategies simultaneously, and it kind of created a natural hedging, reduced overall portfolio variance. Just as Ernest Chan says, you're trying to create strategies that negate the other strategies' risks, and that works very well. So only 8 of those strategies actually took trades, the other 2 didn't. But I think I'm just keeping on building on the amount of active strategies I'm having. Now, multiple timeframes approach really has helped massively with diversification this particular month. I guess previous months as well. A lot of my strategies, I will say, none of them really run below 10 minutes. I've never found that much success below those sort of marks. And a lot of them from 10 minutes to days, they're changing all between there. And obviously they're trying to change on markets as well. But I do have an over correlation to the NQ markets and ES markets. They're just the most volatile. I've just experienced the best returns with those. I do know, at least on a diversification side point, I could definitely improve there. I do have a couple. I do have a couple of YM and CL and other instruments as well being traded. But I would try and like to build up more strategies for those as well. But just the best returns really have come from NQ because of that volatility. Now, as I was going to mention earlier, that there's definitely a good blend of high frequency or more high frequency. Obviously, I'm not doing anything like market making or anything like that, and selective strategies. So as you see, if I scroll back up to the strategy performances, you can see the amount of trades being taken do vary a lot. So this one's obviously taking 102, this one's taking 80, this one's taking 47. It varies quite a lot. And obviously the best performing one only took 19 trades, and it was just very, it was a good month for it. And then lastly, I put a tweet out about this, but try and focus on portfolio level metrics over individual strategy performance. Obviously, you want to keep in tune with your individual strategy performance if it's going to be a steep drawdown, if it's breaking Monte Carlo max drawdown, all those sort of things. But at least on key performance metrics and all those sort of things, I always think you should look on a portfolio level. Obviously, this takes some time. If you only have one strategy, then you can only look at your individual strategy at the moment. But as you start to build out, whether that be 2, 3, 5 strategies, or you're someone like Jacob who has, I think it's 20 strategies now. I can't remember correctly. I think it's 20 over strategies. Then you have to really look at the portfolio level side of things, at least in my opinion. But yeah, I hope you found this useful. And apart from that, I hope you had a great month as well. And I'll see you next month.